Hello friends, welcome back. So far we have completed all the major topics. There are total 3 areas which are left to be discussed for this fast track batch, that is November 22 and May 23. And I could not complete it, so because I just went to Sabarimalai and I have been returned, and thereafter I fell ill. I could not complete it. So that's why I'm just taking this now. And 3 topics, that is payment process, returns and registration is pending. So we'll quickly complete that. So you can look into page number 237, payment process. So in this payment process, actually GST network will maintain 3 ledgers on behalf of every registered person. So what are those 3 ledgers? Electronic liability ledger, electronic credit ledger and electronic cash ledger. So electronic liability ledger, these 3 ledgers are not maintained by the registered person, but it is maintained by GST network on behalf of every registered person. And electronic liability ledger contains the details of liability that is to be paid by the registered person. Majorly there will be 5 heads: TIPFO, tax dues, interest, penalty, fee and others. Tax refers to the tax that is payable, interest that is for delay in payment of tax, and penalty is for breach of any law, breach of provisions of the law, and then fee will be late fee for delay in filing return and any other amount due to the government. So these 5 dues will be there where in electronic liability ledger. Then whatever balance that is there in the electronic credit ledger can be used only for payment of tax dues. The balance in electronic credit ledger cannot be used for payment of other dues. So only it can be used for payment of tax dues. Okay. Then next, but the balance in electronic cash ledger can be used for payment of tax dues as well as other dues, both we can use. So the balance in cash ledger for payment of both tax dues and other dues. How money will come into the electronic credit ledger? So whenever we file GSTR 3B, so in that GSTR 3B we will be taking the ITC. So in that availment of ITC, the moment we enter the ITC in GSTR 3B, so that comes into our electronic credit ledger. Not only that, even on account of taking the ITC on closing stock under section 18 subsection 1, that is liable to get registered, and he is making application for registration within 30 days, voluntarily he is getting registered, composition scheme to normal scheme, or outward supplies which were exempted now become taxable. Like that, in these cases we avail the ITC on closing stock, that person. So that ITC will be availed in ITC 01 by filing one form. So therefore ITC 01, through that also money will come into the credit ledger, that is input tax credit will come. Or sometimes there will be transfer of business. Whenever there is a transfer of business also, so from the transfer of credit ledger to the transferee's credit ledger it will come. For that one form will be filed, that is ITC 02 and ITC 02A. 02A is in case single registration is getting separated into multiple registrations, ITC 2A. So this is how the money will come into credit ledger that can be used for payment of tax. Whereas how money will come into cash ledger? The moment when we file our payment challan, when we fill the challan and we make a deposit of tax, then also money will come into the cash ledger. Deposit through PMT6 challan, and then TDS and TCS. So this concept of TDS TCS not there for CA Inter. So this TDS TCS, whatever is deducted by the recipient, so that will also be coming into the electronic cash ledger, which can be used for payment of liability. TDS TCS through utility and any refunds. Suppose if any refund is granted, refund of excess payment of tax will be credited back to the cash ledger. So that also will come into the cash ledger. Now the balance in the cash ledger can be used for payment of all the dues, that is tax dues as well as other dues. Now still if there is any balance in the credit ledger or cash ledger after payment of interest, penalty, fee or any other amount, that may be refunded. But there is no restriction with respect to refund from the cash ledger. However, there are restrictions in case of refund from the credit ledger. Cash ledger there are no restrictions. Whatever balance that is there in the cash ledger we can get. But credit ledger, the balance we can get it as a refund only in 2 cases. That is zero rated supplies. So what are zero rated supplies? Export of goods or services, supply of goods or services to SEZ. In that case we will get the refund. of ITC. Then inverted tax structure. Inverted tax structure means the tax rate on output is less than the tax rate on input. In that case also we will get the refund. The tax rate on outward supplies. So for example, I am purchasing raw material X I am purchasing, which is taxable at 18%. Using this raw material X I am making finished goods X. That finished goods is chargeable to GST at 5%. So means the tax rate on outward supply is less than the tax rate on inward supply. In that case also I will get refund, because there will be excess ITC, I will get refund. So therefore it is important to know that when we will get refund, so the refund from the electronic credit ledger is possible only in two cases. One is inverted tax structure, other is zero rated supplies. Then, so how we will deposit the money into this payment challan, cash ledger. So we can make a deposit. The moment we deposit, that balance will go into the cash ledger, and whatever balance that is there in the cash ledger can be utilized for payment of liability. But what are the modes of deposit of money into the cash ledger? So either we can make a deposit through internet banking, net banking, through internet banking, debit card, credit card. But practically if you see, there is no debit card, credit card option in the portal, but in law it is given debit card, credit card, NEFT, RTGS. Internet banking is online, but this NEFT, RTGS is offline. We will go to the bank, we will fill the form and we will make the deposit. Or cash, as cash we can make a deposit over the counter. But for cash deposit there is a restriction. How much? Up to 10,000 rupees per tax period. Means in a month we have to pay the tax, so not more than 10,000 rupees in cash. But account transfers, all these things are allowed, whatever may be the amount. But when it comes to cash, only 10,000 rupees is the limit per month. Then we have the forms here. So we have PMT1. PMT1 refers to electronic liability ledger. PMT2 is electronic credit ledger. PMT3 is whenever we are getting the refund. Suppose if we have paid some tax, excess payment of tax, that excess payment of tax will be coming back to the source ledger. Okay. For example, let's take a scenario that, say for example, if for the month of July 2022, for the month of July 2022, GSTR 3B has been filed, and in this GSTR 3B, the gross liability is, say, some 50 lakhs. Gross liability is 50 lakhs. Now, how this gross liability of 50 lakhs is discharged? This gross liability of 50 lakhs is discharged partly through credit ledger and partly through cash ledger. So, how much is paid through electronic credit ledger? So, we paid, say, 30 lakhs through electronic credit ledger, and we have made a payment of 20 lakhs through electronic cash ledger. For which month? For the month of July. Now in this GSTR 3B, what has happened? So we have paid some tax in excess. So GST paid in excess for this period. For this period, with respect to one invoice, we paid GST in excess. GST paid in excess. How much? Say 1,20,000 we paid in excess. Actually, that 1,20,000 we have paid in excess, and that has been paid this way. Now we filed refund claim. Okay, refund granted, refund sanctioned. So we made a claim that there is excess payment of tax, and we filed various documents to prove that there is excess payment of tax, and the refund is sanctioned. This refund amount will go to which place? This refund will go to electronic credit ledger and electronic cash ledger. It will not go to electronic cash ledger, because so this 1,20,000 is definitely not paid fully through cash ledger. Na? It is partly paid through credit ledger and partly paid through cash ledger. Due to that reason, this amount will go to credit ledger as well as cash ledger. In what ratio? For that, the law says that it will be going to the credit ledger and cash ledger in the payment ratio for that month. What is the ratio in which it is paid for that month? 3:2 ratio. So therefore, refund into the electronic credit ledger, so will be 1,20,000. 1,20,000 into 3/5. 1,20,000 into 3 by 5. So that comes to 72,000. So that 72,000 will go into electronic credit ledger. Whereas whatever will go to the cash ledger, 1,20,000 into 2 by 5. So the balance. So balance 1,20,000 out of that, that is 48,000 will go to the electronic cash ledger. And electronic cash ledger, or it can go to the bank account also, or it can go to bank account of that person also. But to give the refund to the electronic credit ledger, so they will be, that is GST officer will be passing an order. That order is form GST PMT 3. That is the form in which, so the money will be going to the credit ledger, form GST PMT 3, that's 72,000. And that is this concept. So refund to be recredited. Refund, so whenever the amount will be coming back to the credit ledger, okay, recredited. So based on order by the proper officer, that will go to the credit ledger. For that, a form that will be passed is known as PMT 3. Not only that, sometimes we claim the refund, and the moment we claim the refund, the credit ledger gets debited. Now the refund gets rejected, then also the money will come back to the credit ledger. In that case also the order will be PMT 3. Then PMT 4 is communication of discrepancy. That is, say we have the balances not reflecting properly into our ledgers. In that case, we need to inform to the portal about the discrepancies. So that discrepancies will be communicated to the portal through this PMT 4. PMT 5 is electronic cash ledger, so regular, and PMT 6 is deposit challan. So PMT 6 deposit challan. PMT 7 is intimation to the payment gateway that the money is debited from our bank account but not reflected in the cash ledger. It so happens that we make the payment, the money gets debited from our bank account, but it is not coming into the cash ledger. So then in that case, so we will communicate to the payment gateway through the portal, so that the portal will cross check with the payment gateway and ensure that the money is recovered and it will be reflected in the cash ledger. For that, we will file one form, that is PMT 7. PMT 8 we don't have. So PMT 1 is electronic liability ledger, PMT 2 credit ledger, PMT 3 refund order, PMT 4 communication of discrepancy, PMT 5 credit ledger, PMT 6 deposit challan, PMT 7 so bank communication to the payment gateway. PMT 8 we don't have. PMT 9 is there. PMT 9 is for shifting the balances from one cell to the another cell in the cash ledger. That is, while making deposit into the cash ledger, we deposited in CGST, SGST, but actually we should have deposited in IGST, or we deposited in CGST, SGST under interest, but we should have deposited under the tax. So like that, some reason, because there will be a 20 cell matrix in the PMT 6 challan. So when you take PMT 6 challan, this form GST PMT 6 challan, deposit challan, form GST PMT 6 is a payment challan. Usually this payment challan will be having a 20 cell matrix. So we have 4 major heads. That is, CGST is one major head, then SGST or UTGST, depends. So both will not be there at a time. Then IGST and compensation cess. So these are the 4 major heads. And minor heads, if you see, tax, interest, penalty, fee and others. Okay, tax, interest, penalty, fee and others. So these are the 5 minor heads. So for every major head, these 5 minor heads will be there, which means literally there is a 20 cell matrix. Okay, now what happens is that we make a deposit into some cell. Okay, say for example, we deposited 10,000 in CGST and 10,000 in SGST towards the tax, and IGST towards the interest we deposited some 5,000, okay, 5,000 towards the interest. But actually what happened, what should have happened is that, so we filed the challan, so therefore this 25,000 we paid. Thereafter what happened is that this 10,000 should go to IGST tax, and this 5,000 is actually penalty under so CGST, SGST. So now what will happen is that we will file PMT 9, form PMT 9. We will file form PMT 9 to shift the balances from this place, to shift the balances from this place, okay, this 10,000 rupees and this 10,000 rupees, to shift it from here to IGST tax. To shift it from here to IGST tax, we will be filing one PMT 9, okay, PMT 9. In PMT 9, multiple records can be added. Multiple records can be added. So record number 1, 10,000. Record number 2, another 10,000, shifted from CGST, SGST. So that will come to 20,000 IGST. Then penalty, so it should go to CGST, SGST. So this 5,000, what happens is that, so it should go to penalty CGST 2,500 and penalty SGST 2,500, okay. So for that also again we will be filing one payment challan, that is PMT 9 for transferring the balances. So then what will happen, the rectified statement will be like, so this 20,000 will be coming into the tax, and the 2,500 will go to the penalty CGST, SGST. So this advantage is there by filing PMT 9 for transfer of balances in the cash ledger. Then next one, so based on that only I have given one illustration, you can see. So this is the cash ledger on the debit side and credit side. So now we made a deposit of 20,000 into IGST tax. However, CGST payable is 10,000, SGST payable is 10,000. How the payment shall be made? How the payment shall be made? So what we will do is that the 20,000 rupees will be shifted to CGST, SGST by filing PMT 9 form GST PMT 9. So when we file that form, what will happen? So the amount gets shifted to CGST and SGST tax 10,000 each, which can be used for payment of liability. Suppose if this facility is not there, what we need to do? Again we need to make a deposit, and this 20,000 we need to get as a refund. So that is a Herculean task, but now this advantage is there. Then this illustration also I discussed that refund will be going to the source ledger. For July 2021 GSTR 3B file where the gross liability is 200 lakhs. How that gross liability is paid? Through credit ledger 120 and through cash ledger balance 80 lakhs. And GST is excess paid by 1,50,000. So what is the ratio? So 120 is to 8. So that is 3 is to 2, same. So therefore 3 by 5 will go to the credit ledger and 2 by 5 will go to the cash ledger. So while discussing PMT3 I gave you this. Then what is the manner or order in which the liability should be paid? So whenever a taxpayer is having the liability, first he need to use that whatever money that he has towards payment of self-assessed tax pertaining to the previous tax period. What is self-assessed tax pertaining to previous period means? That is last month he would have filed one GSTR1 now. So that GSTR1 some liability is there which is not yet paid. So that GSTR1 liability should be paid now, which is pertaining to the previous month. Then current month he will be filing one GSTR1. So that current month GSTR1 whatever liability is there, that should be paid second. And thereafter he would not have reported some transactions, he would have evaded payment of GST. So that liability he need to pay on to the third. So how that liability will be known? Department will conduct the audit or investigation or search. They will come to know that this much amount he need to pay. So then they will be giving him giving that person an order, so or a demand it called as, so that money he need to pay. So that is third. So any amount, see this, self-assessed tax and other dues such as interest, penalty fee or any other amount relating to previous tax periods returns. Then current tax period return. Then any other amount payable under the act or rules, that is liability arising on account of demand notice, proceedings, etc. Then unregistered person requiring to make a tax payment will still be using the GST portal. Say there is an unregistered person liable to pay tax, but he didn't pay tax. Why he did not pay tax? So he evaded. Okay. So he crossed the turnover, he suppressed the turnover, he evaded the tax, he did not pay. So now he need to pay. Unregistered person liable to pay tax. When this unregistered person is liable to pay tax, so he will be making the payment through GST portal. And so for that, a temporary GSTIN will be given to that person. Temporary identification number will be given to that person to make the payment. Okay. Then this is about section 49. Whatever we have discussed so far, this information is given in section 49, an overview of electronic ledgers. In section 49, we have even this manner of utilization of credit. That is whatever balance that is there in the electronic credit ledger under IGST. So IGST credit should be used for payment of first IGST and then for CGST, just like that priority will earn now. So that is also there in section 49, but that we discussed in input tax credit itself. Okay. So this is about section 49. Then section 50 is there. That section 50 is interest on account of delay in payment of tax. So when the interest is payable, if there is a non-payment of tax or short payment of tax. Non-payment of tax or short payment of tax is like, so you are required to pay tax but you did not pay. Short payment is you are required to pay but you paid lesser amount, that is known as short payment of tax. Then what is the rate of interest? 18% per annum. And what is the period for which the interest should be computed? Period starting from the first date after the due date till the date of payment. Starting from the first date after due date till the date of payment, and both days should be included. And other provisions relating to interest. The payment of interest in case of belated payment of tax should be made voluntarily. That is, the taxpayer, suppose if there is a delay in payment of tax, he need to compute it and pay. And this will be debited to the electronic liability ledger, and the liability for interest can be settled by adjustment from balance in cash ledger, not credit ledger. And for delay in filing 3B, interest is computed, but that interest is computed on the net liability, not on the gross liability. For example, GSTR 3B of August needs to be filed by 20th September. Suppose if it is not filed by 20th September and if it is filed by 30th September, so then the 10 days we need to compute the interest, because we will pay tax at the time of filing GSTR 3B. That's why whenever we file 3B, at the time only we will pay tax. So for delay in filing 3B, there is a delay in payment of tax. So therefore for the 10 days we need to compute interest, but that interest will be computed on what liability? Gross liability or net liability? Net liability. That is gross liability minus input tax credit. Net liability is there na. On that net liability, the interest will be computed. Okay. For example, you see this. And one more point also we need to know in this regard. Whenever we have made the payment, means the moment we deposit the money in the cash ledger, it does not mean the tax is paid. So the moment we deposit the money in the cash ledger does not mean the tax is paid. First we need to deposit the money into the cash ledger. When we deposit the money into the cash ledger, then that money that is there in the cash ledger will be adjusted towards the payment for the liability ledger. That will happen through filing a return. What is that return? GSTR 3B. So we will file one GSTR 3B. Through that only we can make the payment. So here, so what happened in this case is that a person has deposited the money into the cash ledger. Say this. So gross liability 8 lakhs for July 2020. ITC availed is 3 lakhs. And therefore, this 3 lakhs is input tax credit availed, gross liability 8 lakhs. So the difference is 5 lakhs. He deposited that 5 lakhs. Balance in cash ledger. So 5 lakhs he deposited by 20th August. So for July, what is the due date of payment of tax? That is due date of filing GSTR 3B or due date of payment of tax. 20th of next month. So by 20th August, he deposited 5 lakhs. GSTR 3B of August 2020. So for August 2020, the gross liability is 4 lakhs and ITC is 1 lakh. So the difference is 3 lakhs. Already 5 lakhs is there in the cash ledger. He did not file GSTR 3B because for July, August and September, for July, August and September, 3 months put together, he filed it on December. So 3B not yet filed means that balance will be there in the cash ledger. So again he deposited the difference, 4 lakhs minus 1 lakh, that 3 lakhs. So already 5 lakhs was there na. Now 3 lakhs when it is added, so that came to 8 lakhs. Then again gross liability 6 lakhs, ITC 4 lakhs, the difference 2 lakhs. Again he deposited that 2 lakhs also, now the balance is 10 lakhs. So what is the mistake that this person did? He just deposited in the cash ledger but he did not pay. And all these 3 months he filed GSTR 3B on 28 December. On the date when he filed GSTR 3B only, the tax gets adjusted. Until that point of time the tax will not get adjusted. So here he need to pay interest. Why he need to pay interest? Because he did not file 3B on time. So he filed 3B late. For July 2020 when he need to file 3B by 20th August. But when he filed 28 December, then in August 11 days, September 30 days, October 31 days, November 30 days and December 28 days. So 130 days he need to pay interest. Okay. For what? On what? 130 days he need to pay interest on what? 8 lakhs minus 3 lakhs, 5 lakhs. On 5 lakhs he need to pay interest. So on 5 lakhs he need to pay interest at the rate of 18% into 130 divided by 365, 32,055, same way. Because there is a delay in filing 3B, so interest is computed on the net liability. Then again August 2020 when the 3B should have been filed by 20th of September, but he filed it on 28th December. So what is the delay? 20th September, so 10 days in September and October 31 days, November 30 days and December 28 days. So for 99 days interest will be computed on what? Net liability. Again, what is the net liability? The gross liability 4 lakhs and the ITC 1 lakh, so the net liability 3 lakhs. On that interest is computed. Then again for the third month, for September 2020, what is the due date of GSTR 3B? 20th of October. 20th of October means it should be paid by 20th of October. So it is paid on 20th December. So in October 11 days, November 30 days, December 28 days. So for 69 days, interest will be computed on what? Net liability, that is 6 lakhs minus 4 lakhs, 2 lakhs. So this is about the computation of interest. Okay, now we are moving on to interest payable on account of wrong availment and wrong utilization. So whenever we wrongly avail the credit and wrongly utilize for payment of liability, so then in that case on account of wrong availment of ITC, interest will be computed but only to the extent that is utilized. Suppose if I have availed ITC but I have not utilized ITC, then I don't have to pay the interest. For example, you can see this, there is one question here, GSTR 3B of July 2021 filed on 12th August. So actually July 2021 due date is 20th of August, but it is filed on time, that is 12th of August, where the gross liability is 12 lakhs and the ITC is 18 lakhs. So there is enough balance of ITC, so we are using that ITC and we will pay 12 lakhs. So the net liability will become 0. Now for this month, the wrongly availed ITC of 2,50,000 during July 2021 is reversed in GSTR 3B of December 2021 filed in 20th January. So how much is the wrongly availed ITC? 2,50,000. Had the 2,50,000 not availed, what would have been our liability? 0 only. How? 12 lakhs is the gross liability. Suppose if the 2,50,000 is not taken, so then the ITC would have been somewhere 15,50,000. So out of 18 lakhs. So 15,50,000 we can use 12 lakhs. So therefore the net liability will be 0. If you take wrong ITC or if you take correct ITC, the net liability is going to be only 0, which means that wrongly availed ITC we have not utilized. Why we have not utilized? Because whether you have not taken the credit, that wrong credit, or you have taken the credit, the net liability is going to be the same. So due to that reason we have not utilized. So due to that reason, as there is no short payment, interest under section 50 subsection 1 shall not arise. Suppose if in this illustration, what if the wrongly availed ITC is 8 lakhs? Suppose if that 8 lakhs is not taken, out of 18 lakhs, if 8 lakhs is not taken, then the credit would have been only 10 lakhs. So 10 lakhs adjusted for payment of liability 12 lakhs. So therefore 12 minus 10, it would have been 2 lakhs liability. What liability? Net liability. Because of taking the wrong credit of 8 lakhs, the total ITC is 18 lakhs and then the net liability will be 0. Means what is the short payment of tax because of taking the wrong credit? 2 lakhs. Means we have used ITC only to the extent of 2 lakhs. We did not use entire 8 lakhs. So because if you have not taken 8 lakhs, my liability would have been 2 lakhs net liability. Because of taking that 8 lakhs credit, my net liability is 0. which means out of that 8 lakhs, how much I have used for payment of GST? Only 2 lakhs. Therefore, interest is computed only on the wrongly availed and utilized ITC. So, what is the wrongly utilized ITC here? 2 lakhs. On the 2 lakhs, interest will be computed at the rate of 18%. And from when? From the first date after due date till the date of payment. So, 18% is computed on 2 lakhs. That clarity we arrived. From which date? From the date after availment of ITC. What is the date on which ITC is availed? So, wrongly availed ITC. So, here whenever they file 3B, that date. So, but here what is the date on which they filed 3B? 12/8. But here it is interest not computed on wrong availment. It is on account of short payment of tax. See, interest is not on account of wrong availment, but on account of short payment of tax. So, by when it should have been paid? By 20th August it should have been paid. So, therefore, we need to count from 21st August. Why we need to count from 21st August? From the first date after availment of ITC till the date of payment. So, therefore, 21st August 2021 till 20th January 2022. So, for this 153 days, we need to compute the interest that is payable. So, why 20th January 2022? Because GSTR 3B of December filed on 20th January 2022. So, till that date from 21st August, even though GSTR 3B has been filed on 12th August, but we will count it from 21st August only. So, therefore, in the month of August 7 days, and in the month of September 30 days, October 31 days, November 30 days, December 31 days, and in January 20 days. So, for 153 days, we need to compute. So, 2 lakhs into 18% into 153 by 365. So, 15,090. So, what is that point that you need to remember? Interest is applicable only in case of wrong utilization of ITC, not on account of wrong availment of ITC. That is this point. Then there are two rules in this, rule 86A and rule 86B. What does rule 86A says? Rule 86A says that whatever ITC that we have availed in our credit ledger may be suspended for a maximum period of 1 year by the proper officer. So, whatever credit we have taken, so means it may be matched credit also, but that can be suspended by the proper officer for a period of 1 year. So, that power is there to the proper officer. So, up to 1 year, it does not mean 1 year rigid. So, up to 1 year means it can be 3 months, 6 months also. And when GST officer is having power to disallow the set off of credit for a maximum period of 1 year, if we have availed ITC and that supplier who issued the invoice is missing, the supplier is not in existence or not doing business from the place where they have obtained registration, or the recipient who availed ITC is not in existence or not doing business from the place where they have obtained registration. So, either the supplier is not in existence means not traceable, or doing business in a different place. So, two things: recipient not traceable, but just return is filed, but he is not traceable, or he is traceable but not doing business in the place where they have obtained registration. Then ITC availed without actual receipt of goods. So, actually section 16 subsection 2 put some conditions for availment of ITC. What does it say? Only whenever we receive the goods or services we can take the credit, correct? Not based on invoice. So, based on invoice a person has taken credit, but goods are not yet received. ITC availed without receipt of goods. Then ITC availed against an invoice for which supplier has not paid the tax to the government. So, recipient availed the ITC, but the supplier has not paid the tax to the government. So, which means, so GSTR 1 has been filed by the supplier, GSTR 3B is not filed by the supplier, but based on GSTR 1 of the supplier, that is reflected in 2B of the recipient. So, recipient took the credit, but supplier did not file GSTR 3B and pay the tax. So, then whatever ITC that is taken by the recipient may be suspended. Then invoice or debit note against which ITC availed is not in existence, invoice is missing. So, in these cases, in these 5 cases, what are the 5 cases? Supplier is not in existence or not doing business from the place where they have obtained registration. Recipient is not in existence or not doing business from the place where they have obtained registration. Supplier has not paid the tax, or invoice is missing, or ITC availed without receipt of goods. Any of these 5 cases, these are all actually separated by R. So, any of these 5 cases, proper officer is having power to disallow the set off of credit for a maximum period of 1 year. So, it is like temporarily suspending the credit. But after 1 year, what will happen? After 1 year, suppose if the ITC is genuine, So it is not on account of the mistake of the recipient that ITC is genuine, so he can enjoy the credit thereafter. Suppose if he has taken the fake credit, so that fake credits will be rejected by the department. Upon expiry of 1 year from the date of restriction, the registered person shall be able to debit the input tax credit disallowed, subject to any other action that may be taken against that person. Suppose if he has taken fake credit, that will be recovered or that will be disallowed permanently. Suppose if it is not on account of the mistake of the recipient, but on account of the mistake of the supplier, then after 1 year, so the recipient can enjoy that credit. This is given in 86A. So this can be asked for a short note question. Now 86B. 86B is about, so restriction on whatever credit that is there, we cannot fully use that credit. So to whom this 86B restriction is applicable? A person whose turnover in a month exceeds 50 lakhs. So whose turnover in a month exceeds 50 lakhs. Month, not year, month, 50 lakhs. That too what turnover? Turnover excluding exempted supplies and zero rated supplies. Means what? Only taxable turnover. Only taxable turnover. We should take out exempted, we should take out zero rated, and we should see only the taxable turnover. And that taxable turnover, even non-taxable supplies also should be taken out. Exempted includes non-taxable, that should also be taken out. Now we need to see what is the taxable turnover. And if the taxable turnover exceeds 50 lakhs in a month, then 99% of the liability will be paid through credit ledger, even though you have enough balance, but 99% of the liability will be paid through credit ledger and 1% of the liability you have to pay through cash ledger. But this is not applicable for a person whose turnover does not exceed 50 lakhs in a month. Okay. Why mainly they brought this? Because the government wanted some cash inflow. So for the purpose of creating some cash inflow, what they are telling, even though you have enough balance, for example, I have a liability. My liability for the month is say 20 lakhs. 20 lakhs is my liability. Now 1% I have to pay through cash ledger. Okay, 1% I have to pay through cash ledger. Electronic cash ledger, how much I have to pay? 1%. That is 20 lakhs into 1%. 20,000 I have to pay through cash ledger, and I can pay through credit ledger. So 19,80,000. And what is my balance in the credit ledger? My balance in credit ledger, if you see, my balance in electronic credit ledger, if you see, I have 25 lakhs. So means I have a balance more than 20 lakhs. But even then I can use only 19,80,000. And what is the balance in the credit ledger after payment? This is before payment. This is before payment. Okay, before payment. What is the balance in electronic credit ledger after payment? After payment, if you see, so balance in electronic credit ledger, ECRL ECRL, electronic credit ledger. So from 25 lakhs, we are using 19,80,000. That will be 5,20,000. Actually, we can use entire 20 lakhs, but they are telling that we can use only 99% of the liability through credit ledger and 1% we need to pay through the cash ledger. This is what we need to follow. So this will be one adjustment in the computation. So regularly we do computation of GST payable na. In that regular computation of GST payable, ensure that so this adjustment is being applied. Check the turnover, not the liability, turnover. So when first of all this will be applicable? If the turnover in a month, exceeds 50 lakhs, then only it will be applicable. Pay 1% of the gross liability through electronic cash ledger, even if there is balance in the electronic credit ledger to make the payment. And turnover means it excludes exempted supplies, zero rated supplies, even exclude taxes, non-taxable. And to whom this is not applicable and what are the exemptions? Non-applicability, 4 points, 4 people, government and its family. Who is government and its family? Central government, state government, government department, public sector undertaking, statutory body or local authority. Okay, these people, government and its family, government department, PSU, local authority, statutory body, for them it is not applicable. Mainly this provision is created to have a cash inflow. So what's the point if government itself is making payment? So there is no point in that. So it is like, so people generally, normal taxpayers, if they pay 1% like that, so this 20,000 like in our example, that will create a cash inflow so that they can use it for the expenses, mainly for that. Then exemptions from 86B. So 86B, these cases it is not applicable. So already 4 points, now 3 more points. Suppose if they have deposited income tax of more than 1 lakh in the last 2 years. So deposited more than 1 lakh of income tax in the last 2 years means already they are paying some cash, deposited 1 lakh, more than 1 lakh. So then again they don't have to comply with this 86B to make payment through cash ledger because already they are paying income tax. So government wanted cash inflow, somehow they got the money, that's why. Then received a refund of greater than 1 lakh in the preceding financial year. Why? So they are eligible for a refund. A refund has been sanctioned previous year. Preceding year more than 1 lakh refund is sanctioned, but refund is not yet paid. So why? Because money is not there with the government, cash is not there with the government, so refund is not given. Now in this case, so what they are telling is that you don't have to comply with the provisions of 86B. We are exempting you because already we are required to pay you some money so that we are not able to pay. So therefore we will pay it later. You are eligible for a refund more than 1 lakh. We need to pay. We could not pay. So you don't have to comply with 86B. That is this point. Then suppose up to the current month in the financial year, current year, up to current month, you already paid more than 1% through the cash ledger. Now you don't have to pay anything through the credit ledger. That is, you have already paid 1% to the cash ledger, so you can use entirely credit ledger. For example, so see this. So let's try to understand this with a small example. That is financial year 2021-22. Financial year 2021-22. Now up to, that is from April 2021 to November 2021. For these months, what is my total liability? Gross GST payable. Gross GST payable. So total I am taking up to November 2021. Gross GST payable. And thereafter, how it is paid? Paid through electronic credit ledger and paid through electronic cash ledger. Paid through electronic credit ledger and paid through electronic cash ledger. So what is that liability? Say the gross GST payable is somewhere 180 lakhs. 180 lakhs is the gross liability. Paid through credit ledger is 170 lakhs. 170 lakhs paid through credit ledger and 10 lakhs is paid through cash ledger. Now, what is the percentage of liability paid through cash ledger? What is the percentage of liability paid through cash ledger? So through cash ledger, if you see 10 lakhs divided by 180 lakhs. Okay, 10 lakhs divided by 180 lakhs into 100. Okay, so 10 divided by 180 into 100, that will be what? 5.55%, which is greater than 1%. Which is greater than 1%. Therefore, okay, so December 2021, for December 2021, so no need to pay. Rule 86B not applicable. Rule 86B not applicable. Why not applicable? Because up to the current month already, so we have paid greater than 1%. Up to the current month already we have paid greater than 1%. So therefore rule 86B is not applicable in that case. That is this point. Okay. So now this actually up to December 2021 means actually for November 2021, not December 2021, November 2021 we need to take. November 2021. So because up to that month, actually the provision says up to that month, paid greater than 1% of the total liability through cash ledger calculated cumulatively up to that month in the current financial year. Okay. Now, how the question could be tested on this 86B, you can see. Messrs. ABC Limited has engaged in manufacture of LED lights and made turnover of 5 crores in a previous financial year. His filing is GST return in the month of Jan 2020. Sale of LED light 60 lakhs. Interest will not come. Exempted supply don't take. and export without payment of tax, 0 rated also will not come. Then what will be taken? Only taxable turnover. What is the taxable turnover? 60 lakhs. 60 lakhs is more than 50 lakhs. So therefore 86B is applicable for this month. And what is their liability? So what is their liability? 60 lakhs is taxable at what rate? Say 12%. If the tax rate on LED lights is 12%, then 60 lakhs into 12% is what? 7,20,000. That 7,20,000, 1%, that is 7,200 we need to pay by cash. This 7,200 we need to pay by cash only. Okay. Then one important point you need to know in this regard, that is, so anyhow RCM liability we need to pay by cash. That will not be counted here. Okay. Note. So GST payable under RCM. GST payable under RCM. GST payable under RCM shall not be counted towards, shall not be counted towards 1%, Why? As such liability is always payable through cash ledger. As such liability is always payable through what ledger? Payable through cash ledger, payable through electronic cash ledger. Due to that reason, anyhow that has to be payable through electronic cash ledger, so that you don't count. So 1% of your FCM liability, actually it is pay 1% of your gross liability, means which liability? FCM liability. Then question number 2, financial year 2021-22. So April gross liability 13 lakhs, credit ledger we have 12 lakhs. So 1 lakh we have to pay by cash ledger, no other go. So we paid. Now what is the percentage paid through cash ledger? 1 divided by 13, that is 7.6%. So therefore this month 7.6%, anyhow we are paying. See, when you need to apply that cumulatively, suppose if that month you have already lot of balance in the credit ledger, and look into May 2021. May 2021 14 lakhs, you have balance in credit ledger 14 lakhs now. So suppose if the May month fully we paid through credit ledger because we have balance. So please concentrate this. May month if we pay everything through credit ledger because we have that much of balance in the credit ledger for May month 14 lakhs if we use, then we will not pay anything through cash ledger. Are we achieving 1% cumulatively? Let's check. So what is the cumulative liability? 13 plus 14, that is 27 lakhs. And up to May month, how much is paid through cash ledger? Because suppose, first we will take, suppose if we are not paying through cash ledger for May month, what will happen? Okay. So therefore, so far 1 lakh, 1 divided by 27, 3.70. So no need to pay anything in May month through cash ledger. Then again, suppose if you calculate it like this, and if it is less than 1%, then we need to pay 1% through cash ledger, like that. Then 15 lakhs for June, and we have enough balance in the credit ledger, 15 lakhs. Now suppose if you use entirely, are you still achieving 1%? So let's see. So 13 plus 14 plus 15, 42 lakhs. So far 1 lakh only, 1 divided by 42, 2.38. Yes, so you don't have to pay anything through cash ledger because we achieved cumulatively 1%. Then again July 28 lakhs is your liability, 27 lakhs is the credit balance. Then naturally you have to pay 1 lakh. So you will pay that. So now what is the cumulative percentage? Total liability 70, cumulatively paid through cash ledger 2 divided by 70, 2.85. Means what we need to see is that every month we are achieving that 1%. Okay. Then August 28 lakhs, we have enough balance in the credit ledger. Suppose if you are using entire 28 lakhs for payment of the liability, so then what is the cumulative percentage? So total cumulative is 98. Total payment through cash ledger 2 divided by 98 is 2.04. So still 1% achieved. Then September, 53 lakhs is our liability and 53 lakhs credit is there. If we use entire 53 lakhs, what is our total gross liability so far? 151. And how much is paid through cash ledger so far? 2 divided by 151, more than 1%. Then again October you take. October 50 lakhs is the liability and 50 lakhs is the credit. Now concentrate. October month is very important. Listen. October month 50 lakhs is the liability and 50 lakhs is the credit. Suppose if you are using credit for payment of your liability, nothing you are paying through cash ledger. Suppose if it is that way, then what is your total liability? 201. How much you paid so far through cash ledger? 2. 2 divided by 201 is less than 1%. 2 divided by 202 less than 1%. So that's why for the October month, we have to pay 1% through cash ledger. 1% of our gross liability. What is 1% of our gross liability? 50 lakhs into 1%, 0.5. So therefore, if you pay 0.5, then what is the cumulative paid through cash ledger so far? 2.5. So 2.5 divided by so total, that is 201. 2.5 divided by 201 is more than 1%. Are you understanding? First you have to take if everything is paid through credit ledger. Are we achieving 1%? No. Then pay for that month 1% of your gross liability through cash ledger. Then naturally you will achieve 1%. Then again, November month also you see. November month 62 lakhs is the liability. 62 lakhs you have credit balance. You are using 62 lakhs for payment of liability. Now, so far how much you paid through cash ledger? 2.5. And what is your total liability so far including that month? 263 lakhs. 2.5 divided by 263 less than 1%. So therefore again for a November month we have to pay 1% through cash ledger. So therefore 62 lakhs into 1%, 0.62. So 2.5 plus 0.62. So that is 3.12. Now 3.12 divided by 263, more than 1%. So whichever month, if you have credit balance, credit ledger balance, if you pay that, check whether you are achieving 1%. Not achieving 1%, then for that month pay 1% of the gross liability. 86B will be applicable. That is this point. So these questions are not yet tested. So therefore there is a chance that for November 22 exam it can be tested. So this is the concept of payment process. Now we have some practice manual questions related to this. Have a look into this. Determine with brief reasons whether the following statements is true or false. Electronic cash ledger balance of 5,000 under the major head of IGST can be utilized for discharging the liability of major head of CGST. So can we shift the balances from one head to another head in the cash ledger? Yes, we can do that. And that can be done by filing one form. Previously it was not possible, but now it is possible. Cross utilization between minor heads and major heads is possible. For that one form we will file. What is that form? Form GST PMT 9 is the form. Okay. Then question number 2. Messrs. Salty and Spicy Limited reduce the amount of 1,50,000 from the output tax liability in contravention of the provisions of section 4210 of the CGST Act for the month of April, which is ineligible credit. Actually, they have taken credit. A show cause notice was issued by the tax department to pay tax along with interest. Messrs. Salty and Spicy Limited paid the tax and interest on 31st July. Calculate the interest liability, ignore penalty. Actually, this question was November 18 question. At that time, the interest rate was 24%. But as per the updated provisions, the interest rate is only 18% should be taken. So even though here it is given as 24% in the answer, suggested answer, but actually we need to take 18% only. So the interest rate 18% should have been considered in this case. However, ICI in their MTP took 24%. So therefore, if you take 18%, then what will be the correct answer? So actually that rate only different. So now if you get this question, you take 18% only. Interest rate is 18% only. So now from the date on which we need to pay tax, 1,50,000 pertains to which month? April month. For April month, what is the due date? 20th of May. So we need to count from 21st May. So in May month, 11 days. And till when we are paying? 31st July. So May over. Then June, 30 days. July, 31 days. So 72 days. For 72 days, interest will be computed. So this answer is wrong. Actually, it should be, how much is the wrongly availed ITC? 1,50,000. So 1,50,000 into 18% into. So 1,50,000 into 18% into 72 divided by 365. That is, interest liability will be 5,326 should be taken as the interest liability in this case. Okay. Then question number 3. Mr. Aman, a registered supplier of taxable goods, filed GSTR 3B for the month of January on 15th April. The prescribed due date to file the said GSTR 3B was 20th February. Yes, for that is January month, the 3B due date was 20th February. But what he did, he filed it on 15th April. So there is a delay in filing GSTR 3B. The amount of net GST payable on the supplies made by him for the said month worked out to be 36,500. 36,500 is the net liability, which was paid on the same date of filing the return. Now, for delay in filing 3B, there is a delay in payment of tax. So, interest is computed on net liability, that is on 36,500. On 36,500, interest will be computed at what rate? 18%. From which date? What is the due date of filing GSTR 3B for January? 20th February. So, you take from 21st February. So, 8 days you take in February. Then March it will be 31 days. And April you take 15 days. That will be 54 days. So, 54 days we need to compute interest. So, 36,500 into 18% into 54 divided by 365, that will be 972 rupees will be taken as the interest in this case. 972 rupees will be taken as interest. Then question number 4. And what is the section that you need to refer? Section 50. Actually, there are only two sections in this chapter, payment process. Section 49 and section 50. Section 49 is about that ledger. Section 50 is about interest on account of delay in payment of tax. Then two rules, rule 86B and 86A. Then question number 4. Messrs. Daksha Enterprises has made a cash deposit of 10,000 under minor head tax of major head SGST. It has a liability of 2,000 for minor head interest under the major head SGST. Can Daksha Enterprises utilize the amount available for payment of interest? Yes, we can use. So, in the cash ledger, in the electronic cash ledger, we can shift the balances from any minor head of major head to any minor head of any other major head. So, cross utilization between minor heads and major heads is possible. So, for that we need to file one PMT9. Actually, the money is now in 10,000 is in tax under major head SGST. We need to file PMT9 to shift it from tax SGST to interest SGST. Then question number 5. Ms. Jimmy wants to adjust input tax credit for payment of interest penalty and payment of tax under reverse charge. Explain whether she can do so. The balance in electronic credit ledger can be used only for payment of tax. That to which tax? Tax under FCM. Suppose for payment of interest, penalty, fee and others, we cannot use the balance in credit ledger. Also, for payment of GST under RCM, we cannot use the credit ledger balance. Then question number 6. Shahil is a supplier of taxable goods in Karnataka. He got registered under GST in the month of September and wishes to pay his IGST liability for the month. Since he is making the GST payment for the first time, he is of the view that he needs to mandatorily have the online banking facility to make the payment of GST. Offline payment is not permitted under GST. You are required to appraise Shahil regarding the various modes of deposit. What are the various modes of deposit in the electronic cash ledger? Total 4 modes are there. 2 online modes and 2 offline modes. 2 online modes is net banking, debit card and credit card. 2 offline modes is NEFT, RTGS and over the counter cash deposit. Further advising with regard to the following issues. Are manual challans allowed under GST? No. So, we have to make payment only e-payment through challan. So, even if you are making offline payment but the challan has to be generated online, that is PMT9 challan. GST PMT9. So, PMT6. GST PMT9 is for transfer. So, GST PMT6. So, using that GST PMT6 challan, so we can transfer the we can make the payment of liability. What is the validity period of that challan? The validity period of that challan is 15 days. So, manual challans not possible. We have to generate a challan through portal, that is PMT6. Okay, PMT6 challan. And what is the validity of this challan? 15 days. The validity of this challan once generated will be valid for 15 days. Is cross utilization among major and minor heads is permitted? Yes. For that PMT9 is required. Then question number 7. It's an RTP May 22 question. Mr. Ayushman, a registered person having intrastate aggregate turnover of 1.2 crores in the preceding financial year did not file GSTR 3B for the month of September 2021 by 10 November. The amount of tax payable for the month of September is 8 lakhs. So all his supplies are intrastate supplies. Is there any late fee payable for the same? Yes, there is a late fee that is payable. This is for delay in filing returns, not only interest, but there is a late fee that is payable. And what is that late fee that is payable? So the late fee provisions are there in returns chapter. So the late fee will be for delay in filing GSTR 1 and GSTR 3B. The late fee will be 25 rupees per day, subject to maximum 1000 rupees if the aggregate turnover does not exceed 1.5 crores in the preceding financial year. In the preceding financial year, if the aggregate turnover exceeds 5 crores, then the maximum late fee will be 5,000 under each act. If it does not exceed 5 crores but exceeds 1.5 crores, okay, exceeds 1.5 crores but does not exceed 5 crores, then half, 2,500. If it does not exceed 1.5 crores, then 1000 rupees will be taken as the maximum late fee. This is under CGST Act. The same is payable under SGST Act. And this maximum late fee for delay in filing GSTR 1 and 3B is common. So now in this case, as the aggregate turnover during the previous year, this is aggregate turnover during previous year. As aggregate turnover during previous year does not exceed this 1.5 crores. So the maximum late fee will be 1000 under CGST and 1000 under SGST. So 2000 rupees will be payable as the maximum late fee. Will your answer be different in A if Ayushman has intrastate aggregate turnover of 5 crores, exactly 5 crores in the preceding financial year? Yes, 2500. If it exceeds 5 crores only, we need to take 5,000, otherwise it will be 2,500. So therefore 2,500 under CGST and 2,500 under SGST will be payable. Okay, that is with respect to this. So total 5,000. And next one, will your answer be different in A if the amount of tax payable in GSTR 3B for the month of September is nil? So then what will happen if it is nil returns? So in case of, this is only in case if there is some values. If it is a nil return, the late fee will be 10 rupees per day, subject to maximum 250 under CGST. So 250 rupees will be payable under CGST and SGST. So the maximum will be 500 for nil return. So this question is based on the late fee for delay in filing returns. Then another question. Restrictions have been imposed on the use of amount available in the electronic credit ledger while 86B, rule 86B. Is there any exceptions? State the exceptions. Yes. So first, it is not applicable to government department, PSU, statutory body and local authority. Then paid income tax more than 1 lakh in each of the preceding 2 financial years. Okay. Then refund more than 1 lakh in the preceding financial year and cumulatively paid 1% up to the current month through electronic cash ledger. Okay. So that theory part you need to write about 86B. Then next one, question number 9, Mr. Piyush, a registered supplier of taxable goods, filed GSTR 3B for the month of Jan on 15th April. The prescribed due date to file GSTR 3B was 20th February. The amount of net GST payable worked out to be 36,500. Actually, this is a repeated question. So we will pay on the net liability. Already we computed this. So this is same as this question 1 question we did now, 972, same thing we got. Same as question number 3. So this question is repeated in MTP May 22, same as question number 3. This is same as question number 3. Okay, same as question number 3. Then next question, Raghav Limited have filed their GSTR 3B for the month of July within the prescribed due date, that is 20th August. Post filing the return, the registered person has noticed during September that tax dues for month of July have been short paid for 40,000. So they filed the return and then they identified that 40,000 they missed. Raghav has paid the above shortfall 40,000 through GSTR 3B of the next month, that is September month, filed on 20th October. How this 40,000 is paid? Cash ledger 30,000, credit ledger 10,000. But remember, only when GSTR 3B has been filed late, only when GSTR 3B, you reported some liability in 3B and that is filed late, then only GST interest is computed on the net liability. Whereas you did not report a transaction, in GSTR 3B and now you are paying it later. So for that, howsoever you may pay partly through cash ledger, partly through credit ledger or fully through credit ledger, whatever may be the way you pay. So you have to compute interest on the total amount, 40,000 in this case. So interest will be computed on 40,000. Okay. And that 40,000 interest will be computed from when? So what is the due date? This pertains to which month? July. For July it is 20th August. So from 21st August 11 days. And when you are filing October 20th, so September 30 days, October 20 days. So for 61 days, we need to compute interest on. So for 61 days, how 61 days? 1 second. So for July, 20th August, so 11 days in August, 30 days in September, 20 days in October. So therefore, for 61 days, we need to compute interest on 40,000. So 40,000 into 18%. So August 21 to 31. So actually 61 days should be taken. 61 days should be taken. So 40,000 into 18% into 61 divided by 365. So that will be 1,203. 1,203 will be taken because the number of days will be 61 days in this case. So 1,203 will be taken as the interest. Okay. Then another part they have given, what would be your answer if 3B has been filed late and the tax of 40,000 has been paid on 2010. So 30,000 through cash ledger and 10,000 through credit ledger. Now what is the net liability? What is the net liability means? That amount which is paid through cash ledger is net liability. Out of the gross liability, you take out the money paid through credit ledger. So the balance is known as paid through cash ledger. So 30,000. So therefore in this case interest will be computed on 30,000 only. Same. Again 61 days because 21st August till 20th October. See here 21st August. August also should be counted. So 11 days in August, 30 days in September and 20 days in October. So 61 days. But it will be computed only on 30,000 into 18% into 61 divided by 365. So 30,000 into 18% into 61 divided by 365. That will be 902 rupees. So we need to take 902 rupees as the interest in this case. Okay. So this is actually MTP May 22 question, but they have done a mistake. So that's what I have rectified here. So these are the type of questions that we can expect on payment process. Okay. With this, payment process is over, and so we will proceed to returns in next video.